Joining me on What Investment today, we have Jon Wallace, manager of the Jupiter Green Investment Trust. Jon, thanks for doing this.
Thank you.
So Jon, it's been a year since you've taken over the trust, and this 2021 was a watershed year for green investing. How do you think the attitude and the landscape's changed over the last 12 months since COP26?
The landscape has changed in the sense that COP26 was almost like a watershed moment in many respects. In particular, if we go back to the start of the conference, there were the leaders giving speeches in terms of what this decade means. I think Joe Biden made exactly the right statement, set the tone for the conference in saying that it's actually this decade which will essentially decide what the rate of progress is that we have in future decades. So I think that places the emphasis firmly on the near term. So gone are the days when we think about climate change issues and wider environmental challenges as being a risk or an investment opportunity for the 2030s, 40s and 50s. Actually, essentially what we are faced with now is a near-term risk and investment opportunity. And for investors in the environmental solutions strategies that we manage, of which the Jupiter Green Investment Trust is one, really what we're aiming to do is to have a vehicle with which shareholders can invest in the solutions suite of opportunities that are associated with tackling climate change.
And it's a broad scope, so the mandate of the fund, what really are the companies that you're looking for?
So we like to refer to the companies really as enablers. So these are often companies that are slightly in the background, but helping wider companies and governments to meet their environmental ambitions. That includes the climate ambitions around net zero, for example, but also wider environmental challenges and ambitions around the circular economy and avoiding the kind of consistent depletion of natural capital more broadly, of which climate change or protecting the climate is one of those challenges. So enablers really are companies which, through their products and services, have a tangible positive impact in the real world on a daily basis. Okay. So we're looking for companies that can kind of, because they're focused in that area, are likely to offer our shareholders a source of long-term structural investment opportunity and growth, because they're going to become much more prominent in their wider markets as the challenges need to be addressed much more urgently.
An ethical investor is very different from a sustainable investor. So when you talk about positive impact, could you go into that in a bit more detail?
Yeah, so I think it's really important that we're clear about what we mean by sort of positive impact. So by investing in listed equity companies, by and large, the impact is generated by the companies themselves, not necessarily by the investment. In some cases, you can say actually there is a tangible positive impact from having made this investment, because you can facilitate early stage companies with fresh capital, for example. But by and large, it's the companies that are generating the impact themselves. And we're just investing in those companies, recognizing that if companies have a sustained positive impact in the world economy from an environmental perspective, it's also therefore going to become a real value driver for those businesses. And as I mentioned before, if those companies are going to become more prominent in their marketplaces, often quite disruptive as well, then we think that's a great source and a great lens for finding great investment opportunities.
COP was good for defining, exclusion used to be the name of the game, whereas now it's more about engagement. But do you think with some stocks or so-called sin stocks, is there no positive impact there? Is it almost engaging with those companies is not worth the time, or is there a different approach?
In a way, I suppose last year was also quite a landscape year, watershed year, in the sense that we could see fairly consistently some quite large achievements from shareholders in particular, often collaboratively working together to subtly shift the strategies of quite large companies. So I definitely think there's an angle there for demonstrating and participating in that change as active shareholders. For us, I suppose, active engagement with our companies is core to what we do, in terms of finding the investment opportunities that we think are best placed to take advantage of the opportunities. But our starting point is really that thematic approach of looking for companies across our 6 environmental solutions themes, which really is a reflection of the core products and services that those companies have in their marketplaces. So you think about clean energy, green mobility, the circular economy, and wider environmental opportunities, for example, in sustainable agriculture and land ecosystems. So that's different really to investing with a purpose of changing the nature of a business. Often, as you say, sin stocks or carbon intensive companies, for example, you could potentially invest in those companies to have a perspective change or seek to improve those companies. Our starting point is different. We're really looking for those companies that are there and best placed to enable that transition, be it a low carbon transition, with their products and services already. So they don't need to be convinced of the opportunity in climate change transition or natural capital preservation and restoration. They're absolutely front and centre as part of the solution set. And if anything, in some cases, they're actually there in their marketplaces is quite a disruptive element to the large incumbent companies in various sectors as well. And I think really what you have then is a combination of approaches which together represents the wider the spectrum of investment or sustainable investment. So we have on our side of things the focus on the companies which can enable the transition. At the same time, other investment approaches would be taking more of a shareholder activist approach and seeking to positively change companies that are more incumbent in more traditional sectors that need to start embracing that sort of solution, should we call it.
Do you think the trust size at around 55 million gives you an advantage over, say, your peers in some of this space?
I think it does. I think it gives it more options. I think first and foremost it means that we can take larger position sizes in relatively small and mid-cap companies, so more meaningful positions in companies that are particularly exciting to us and particularly interesting to us, but are perhaps maybe unaddressable, unobtainable or uninvestable for larger funds that are looking for more liquidity, daily liquidity, for example. So I think there's definitely an advantage there. Looking at
in a more broad sense, the inflation outlook, it hasn't been a strong year for green funds, but for long-term investors, this is still a really good bet. But how do you think the inflation outlook will impact growth over the next 2 to 3 years?
So over that time frame, so 2 to 3 years out, I think, slightly mid to long term, I think that really what we're seeing, if I look back, I studied economics and history, first time around at university, so we can see lots of kind of examples through history when inflation or energy price inflation in particular changes industries quite quickly. So we're not talking about year-on-year change, but over the course of sort of 3 and 5 years, we can see quite pivotal times. So that think about, for example, the entrance of Japanese car makers into the US market in the 70s because of the energy price hikes there. And there's lots of other cases like that. And I think if we see a period of sustained energy price inflation, generally speaking, that's a positive for sectors and solutions companies that can drive down energy usage, energy efficiency in buildings, in homes, across industries, and can really accelerate that rate of transition, which I think would be a positive, obviously, for meeting net zero ambitions and wider environmental ambitions too. Well, with growth harder to come by, surely you'd want to be in these small and medium-sized businesses for the alpha that they can generate. I think it's probably fair to say that there's more interest in environmental solutions companies, so it might be more difficult, I suppose, to find the opportunity for strong, consistent, strong investment returns. However, I also see a fair case that the investment opportunity is widening. So we're consistently finding good opportunities outside of the traditional sectors and investment themes that you'd associate with an environmental solutions portfolio, and that's true of in the small cap territory, but also in the larger cap territory as well. So across the spectrum of market cap sizes, I think we're seeing a widening of the investment opportunity, and that reflects the fact that many sectors that have so far done quite limited amounts to address their environmental footprint are starting to accelerate and starts to be pushed and pulled in the direction of improving their environmental footprint, and that includes areas like agriculture, materials businesses, wider economic sectors, and I think that proliferation of opportunity will probably continue to mean that we should be short of growth opportunities on a mid and long term basis. Going back to COP26 slightly, how did you find, or how have you found that the conversations with your investors has changed since then? I think we're seeing more clients, more prospective clients and shareholders interested in the longer term perspective for environmental solutions. So looking beyond the kind of near term drivers for investment returns and looking through that and seeing that this is a wider investment opportunity that addresses not just climate change but areas like natural capital restoration and prevention of the natural capital destruction we're seeing. I think that has been accelerated by COP26. We started to see elements of those, the connection between climate change and other environmental issues coming through to the fore on the main platform as well, which I think is a very positive driver for interest in what we're trying to invest in. So in a way, I suppose that COP26 has helped to inform and to accelerate the interest in the wider multi-thematic nature of environmental solutions investing. Jon, thank you very much. Appreciate your time. Thank you very much. Thank you.